Hey everybody, it's PJ Patterson here for Market Update for Monday, December 14th. Not long until Christmas. Only, what is it, 24th? So 10 days till Christmas. Hopefully you've got your Christmas shopping done and can just cruise into this part of the year. I, of course, will continue working right through to December 23rd, and I'll be back at it around the 6th or so of Jan. But hopefully we'll be reasonably quiet during Jan. I've got a lot of things to prepare for next year and get stuck into next year as well. Top three things today are going to be inflation. Number one, we're going to hit on that. Number two, the VIX, just a quick touch on the VIX and where that's at, because it's in a great investing territory at the moment. And then finally, going to talk about interest rates and what's going on with rates and some of the things that we're looking at in terms of rates to give us some clues as to where we might be headed. So let's talk first and foremost about inflation. So I've got the CNBC website up here, and I just spotted this morning, and we have a lead article here, a top article, Australian dollar surging on record iron ore prices as tensions with China climb. Now, they always have to have a reason for why a price of something is rising. And it could be China tensions, but it probably isn't. It's more likely that this is just inflation. We're just seeing inflation entering into this program. So the Aussie dollar, as you can see on this chart here, has popped by about a cent from, I think it was around 74 something, 74.30, 40, somewhere around there, to close out last week, and it's popped up into the mid 75-cent range. So it's going to continue higher. I've been saying this now for some time. The Aussie dollar is going to continue higher, will continue higher. Where it stops, I suppose nobody knows. But if history is any guide to this, Quad 2 will be a particularly good quad for the Aussie dollar, because Quad 2, Quad 1 for that matter, and Quad 3 are typically horrendous quads for the US dollar. And so the upside down of the US dollar is pretty much everything else. So when the US dollar goes down, everything else goes up. And that's not going to be different this time. Now, one of the quick thing I want to show you too on inflation is a chart. If I can just find it. We'll come back to the correlations here in a second. Well, first of all, let's look at Bitcoin. Bitcoin is signaling massive inflation. It's pretty much been parabolic ever since sort of late September, early October, when it just shot from around 10,000, it's trading around that $9,000 per coin range up to $18,000 per coin as at the close on Friday. So, or maybe that was a close on Thursday. Anyway, Bitcoin is going to continue to be a place to be. It's an alternative to the dollar. It is where people are choosing to put their cash right now as an extension of this inflation argument. And frankly, it probably has a lot more upside to go. So the way that I'm going to be looking to play that is a company it's a tech company. The symbol is MSTR. I'm going to talk about this when I do the positional updates. Anyway, this guy, he's a wealthy tech entrepreneur, and he pretty much put $400 million of his company's balance sheet into Bitcoin. So he has a huge exposure to Bitcoin. And of course, because of that, his stock price in his company ebbs and flows based on that. But anyway, back to inflation. Look at this chart of the CRB index. So this is the index of 19 commodities. And clearly you can see from that late sort of May, early June period, the CRB index has gone parabolic. Again, just straight up and to the right on the chart. It's up about, I think, 30 or so percent, something like that in that time frame. A lot of other commodities have done very well, not least of which is our good friend oil, which continues to show strength and will continue to do so. The energy stocks were absolutely crushed. I just want to show you a chart of performances, sector performances. And I want you to just key in here on the energy sector. So if we look at the year to date for energy, and this is why I wasn't an energy investor earlier this year, because energy was shit. And in Quad 4 and Quad 3, energy does not do well. Actually, energy can do okay at Quad 3 if a few other things are going on, but it just wasn't really a buy at that stage. But now that we're in Quad 2 and Quad 1 globally, Quad 2 globally, really, it's a reflation trade. oil and energy stocks are going to outperform. Now, if you juxtapose that 1 year, that year-to-date position of minus 44% versus the quarter-to-date, month-to-date, and 1 day, there's a great 1-day move on Thursday. But if you just look at the quarter and the month, I've been invested in energy now for probably about 2 months, holding energy. And so have captured a lot of this upside in energy, and there's more to go. If you think about the fact that year to date it's still down 40, almost 45%, when the oil price really starts to catch fire, pardon the pun, we're going to really see energy stocks explode. And there's an earnings cycle that we're going to go through here, because the depressed share prices of the energy stocks is directly proportional to the fact that oil, it traded at a negative point this year per barrel. So energy stocks got creamed.
You've been listening to the Money Matters podcast. Thank you for joining us.
All of that,
if you liked the content that you've heard today, please subscribe to the channel. And remember to leave a comment, like, and share it. Thank you for joining us. We'll see you next time on the Money Matters
energy
podcast.
sector, which we are. Now, that's probably enough on inflation. I think you get the gist of that. Let's talk quickly about the VIX, because, of course, I like hitting on the VIX. It's an important part of what we do here, looking at the volatility of things. There are no issues right now with volatility across the board. Volatility continues to fade and continues to fall, I guess. There's, of course, going to be periods where the volatility will rise, but we're not seeing any change really in the trend of volatility, which is down. And that's a good thing, because as you've probably heard me say before, cash flows to assets, markets, and asset classes that have low or falling volatility. And we're continuing to see volatility falling across the board. And this is a great sign, again, that we need to be fully invested, which for the most part we are. So I just thought I'd quickly hit on volatility, because again, it's one of those important things to know. Now, we've seen a little bit of a spike in the volatility today. This is because we had a down day on Friday. There's a little bit of movement going on in the Aussie share market at the moment. But again, this is no big deal. It's just background noise, and will probably fade again. Anyway, anything on the XVI, which is the ASX 200 volatility, below sort of the 15, 16 level is nothing. Is completely investable. That's where we want to be investing. I suspect this sucker will fall back. Let's just see where it was earlier this year. If I can get this up on the chart here, if the chart would update, there we go. So earlier this year, where were we? Somewhere around that, around the 10. Late last year, early this year, we were trading between 10 and sort of 15. So I suspect that's where we're going to hopefully go to, down around that 10 level, and probably find that trading range at some point next year. Anyway, that is the quick discussion on volatility. Just to quickly now turn our attention to rates. Now, there's some really interesting stuff going on in the bond market. I just want to see if I can get a bond, some bond charts up here. Come on, play along. Oh, for crying out loud, move the bubble. Let's get some bond market charts up here. Something very interesting is happening in the bond market, and it is this. The bond market is beginning. Sorry, let me rephrase that. Interest rates in the U.S. are rising, and what that where we're seeing that is bond prices are falling. So bonds are getting cheaper because the bond market is pricing in things like inflation and issues around. Basically the fact that they're going to unleash a bazooka of money printing probably early next year when Biden takes over the presidency. But in any case, U.S. Treasury bill and bond rates are rising. This is not a good sign for inflation. The bond market has it figured out. That's why interest rates are rising and bond prices are falling. It's also why we got out of fixed income securities about a month and a half or so ago, because the inflation numbers are going to be, on a comparative basis, higher, and on a rate of change basis, rising. So you don't want to own anything that's super interest rate sensitive right now, because real rates are actually rising. But the way to really play that, because I can't do short selling in any of your accounts, the way to really play that is to just own the stuff that goes up when inflation rears its ugly head. So commodities, oil, energy, small cap stocks, all that sort of stuff does very well when rates are rising and inflation is rising. Basically, when we're in the quad 2 environment, reflation trade, everything does well. Everybody's a winner. You almost can't lose money in the stock market because, again, it's the reflation trade. That's probably all I really want to say today about a market update. I'm going to do that more in-depth, detailed analysis for you of what's going on with positions, just to give you a little bit more of a look into, and you can obviously see it on your accounts anyway, but a bit more of a look into the reasons and the positioning. Because whilst I'm trimming some positions here and there, you'll probably see a few trades coming in from time to time. I reach a certain maximum allocation level, and if it exceeds that, I'll take some profit, trim that position down. If it then goes back down for some reason or has a correction, I may or may not choose to add to that. But typically, what you want to do is treat your portfolio like a garden, where I will prune positions that have overgrown, or for that matter, that made a lot of money, and I will plant those clippings into other things that we want to own and that will do well in the environment that we're in. So hopefully that makes sense. But again, I will go into more detail on that very, very shortly. I think that probably covers it. So I hope you're having a good, quiet week this week. I know schools are coming out, so the kids are going to be home and probably testing some of our patients. But anyway, looking forward to holiday break. I'm sure you are too. I'll have a couple more market updates and things before we go quiet for the end of the year. And as always, if you have any questions, please let me know. Give me an email, call me, book yourself in for a Calendly, for an appointment via Calendly in the boardroom. And I will look forward to chatting with you soon. See ya. Bye-bye.